Hey guys, happy Monday. Can you guess where I am right now? You can see some mountains in the background. I am in Paradise Valley showing homes today, and I wanted to get more mountain views, but it was a little bit hard from that angle. So there you go. There's some mountain views from Paradise Valley. If you're not familiar with Paradise Valley, it is the most expensive area in Phoenix, and I think even the state of Arizona. Very exclusive multi-million-dollar homes, custom built acre lots, and it's in such a great location because it borders Scottsdale, Phoenix, Biltmore area, just a lot of beautiful things in this area. So it has been a pleasure showing homes in here today, and for the last few weeks it's been fun to see something a little bit different. So anywho, I didn't want to delay my update to you guys, so here I am in my car per usual. So let's talk about what's going on in the Phoenix market and what has changed. First of all, I've talked a lot about iBuyers in the last month or two and how much they've been buying up property and listing it for higher prices and just how much activity they've had. Well, Zillow just announced that they are going to pause all of their acquisitions for the rest of the year, mainly due to supply and labor constraints. And so I don't know if that's really going to affect us or not. They certainly have been buying a lot, but just without them doesn't mean it's going to change things significantly. We still have OfferPad, Open Door. That guy was really speeding, by the way. He almost took off my mirror. And a handful of others that are still buying homes and either selling them to investors or relisting them after doing some repairs or renting them out, whatever they plan to do. So I would assume they're just going to absorb a lot of things that Zillow wouldn't be purchasing, but you never know. It may open up some inventory for more of the traditional agent to list that property and sell it. I'm not sure how much that's going to have an effect, but it is headline news in the real estate world, so I wanted to mention it. Also wanted to talk about interest rates briefly. So interest rates are now up to 3.05%. It has gone above 3 recently and around 3.05 now. Will this affect our market? Maybe, if it continues to increase or if it increases significantly. Right now it isn't making that much of a difference, but you know, people get discouraged when interest rates go higher because it decreases your affordability. So if that continues, we may see a little bit of a change. Now, on the other side of that, the conforming loan limit was just increased, and so that is a loosening, lending practice that might actually encourage more people. So you have kind of both sides of the coin there. So I'm not sure how that's going to affect things, but those are two new pieces of information within the last week or few weeks. As far as affordability goes, though, here is a good example of how interest rates affect your purchase power. So last week, if you were going to purchase a home that's about 1,500 to 2,000 square feet, kind of the average size home in the Phoenix area, your monthly payment would be about $1,965 a month. With the increase in the interest rates to 3.05%, that number has now changed to $1,977 a month. So if you were going to buy a house last week and you waited until this week, now it's $12 more a month to afford the same house. Just puts it into perspective. Again, interest rates could go down again slightly. They always change a little bit. We'll see what happens, but just so you know that is how these interest rates can really affect your purchasing power, even within a week's time frame. So wanted to mention that. Also wanted to talk a little bit about forbearance. Ever since the forbearance program started at the beginning of the pandemic, there's been a lot of talk about this creating a glut of supply and a lot of people kind of waiting to buy, assuming that we're going to have a big foreclosure opportunity because of this forbearance. And really, the story is that we have had more than 450,000 people on forbearance plans exit in the last 2 weeks. So this number is declining quite a bit. It's at 1.25 million now and declining every week. So that's a good thing. People are coming off of forbearance and they are able to either sell or tack on the additional to the end of their loan or whatever they're doing, but they're not going into foreclosure. So that's a healthy sign. It's, you know, a little bit sad to think that maybe if there was going to be an opportunity to swoop up a bunch of inventory, that's not really happening, but it's really a healthy thing to see. Almost 3/4 out of all of the forbearance people have come out of forbearance, about 3/4 of them, which is about 3.5 million forbearance plans. So again, that's a good thing. And even though we've had all of these people on forbearance and coming out of forbearance, we're still seeing house appreciation. So again, point being, this really isn't affecting our market the way a lot of people predicted it to be or still talk about it being, and kind of making it a negative thing. So that's kind of the raw stats on that one. But let's talk about our CMI, okay? So this week we're sitting at 347. If you're not familiar, the CMI is the Cromford Market Index. I'm a subscriber to the Cromford Report as a real estate agent, and I am able to get access to this information and share it with my clients. So I come on here and talk to you guys every week. But the Cromford Market Index is a proprietary algorithm that they've created that helps us understand supply and demand in our market, and it also is the predictor of where prices are going in the Phoenix market. So if that CMI is over 110, it means that we are in a seller's market and home prices will continue to increase. So 347 is very well above 110, still in a seller's market, still increasing. What has changed since last week? Not much. It's kind of staying flat. And it's staying flat because our demand continues to increase, which is inflated because of these iBuyers buying all of these homes. So the demand is sitting at 119.1. That's gone up again since last week. And our supply is sitting at 34.3. So 34.3 means that we're about 65% below normal on our supply, but that has continued to increase while our demand's increasing. And so that's kind of kept our CMI number at bay. So it's sitting pretty flat right now. Overall, in the last 30 days, it has gone down 1.6 points. So really not much change at all with the CMI. And again, a lot of this is because we have an inflated demand number of all of these iBuyers purchasing properties. So as of right now, we're just kind of staying put. It's still a seller's market. It's still very competitive on the buyer side. But when we look back to where we were at in May or April of this year, it has definitely cooled a little bit. It's a little bit more palatable, but still definitely a seller's market. So anyway, that's my update. The CMI isn't too exciting this week, but hopefully all the other information was helpful. I am going to take myself home now and get this video posted for all of you guys. Thank you for watching. Thank you for subscribing. If you have any questions, comment below or reach out to me directly. I have all my contact information in the description below. I also have a link where you can set up a time to chat with me if you're thinking about buying or selling real estate in Phoenix. So thank you guys. I'll be back on Friday with another video, and talk to you soon.